Hey guys, welcome back to the channel. Happy New Year to everybody. So I'm back. I hope I am back for good this time around. I was just sick during Q4 last year, so I wasn't able to make too much content. But this time we'll try to make content every week, basically sharing the YTD performance, the charts, indices, how indices are looking like. I do trade my portfolio quite actively, so I will kind of share my thoughts as to how I'm looking at the next week or next 2 weeks, or hopefully a month or something going forward, and how I'm trading it based on that. I do play a thematic trades as well. So I'm going to try to share those things as well. So first we'll talk about the performance, then we'll talk about some charts, then we will look at the stocks that I've looked at this week. Some will be high conviction, some will be low conviction, but we'll still talk about them. Hopefully you'll be able to kind of deduce how I think and what is the reasoning behind choosing a company versus not choosing a company, and how we allocate the portfolio percentage to a specific idea. So that's something that I want to do this year. So let's get into it, guys. So first of all, I'm going to talk about the performance. So far the performance has been great. I know, and the other thing that a lot of people might ask is about the D-Box trade. So I know the D-Box trade luckily went really good. I actually went better than what I expected in terms of the time frame, because I was expecting this performance to come within a year and a half. I'm really happy it came in 6 to 7 months. I'm not gonna lie, I was not expecting the Q3 that came out. I was expecting install base to go up, but not as much as it did. So the trade worked out. I hope everybody made money. I'm still in almost 25-30% of my position. I still have it. Obviously it's the cost base has or the fair market value of that trade has gone up to a point where it's what we invested initially. So I'm still keeping it because I feel like 2026 is going to be another great year for cinemas, with the amount of movies coming out and the kind of movies coming out. So this is going to be a very good year for cinemas, and I want to be invested in the cinemas. And I still believe the best way to be invested in the in the sector is through D-Box. Although IMAX is a pretty good trade as well, but I don't know if the upside can be like that, because it's not that scalable, and the PE ratio is already where it's already reached a parity place, whereas with D-Box you could still see multiple expansion as well as earnings expansion. So I think D-Box is still probably the best way to play that sector. So first of all, I'm going to talk about performance here briefly. Last year we had 108.13% compared to 20.16% QQQ. I will reveal my my portfolio eventually. I just don't want to do that right now. I will do it at a certain point in the journey of this channel. And then the YTD return so far, like the first week or so, has been really good. I don't expect this to continue. This was just a crazy rally. Some of the thematic baskets I was invested in did decently well, and we were able to get to 15.77%. This is not fake. This is real returns. I can share screenshots if you guys want to. I don't have any agenda whatsoever of selling anything, so there's really no reason to lie. And I am sure at certain point this year, it's possible that the fund underperforms NASDAQ, because I do think we're gonna have some crazy swings this year. Hopefully I'll be able to time those properly so that I can get out on time and hopefully short the market as well. So that'll be nice, but we'll see if that actually happens during the year. So this is the performance so far. I'm actually very blown away by this percentage. I did not expect the first week to be this strong, but hopefully it continues, I guess, and we can have another 3-digit return year. It's probably going to be harder than last year, to be honest, because the second year in a election cycle is the hardest year for the stock market. It's toughest year for the stock market. You see crazy wild swings, and I do anticipate that that's going to happen. I feel like the first 2-3 months of this year are going to be easy mode, and a lot of money could be made in February as well as in March. And then once the new Fed chairman comes in, we might see like a tantrum by the market, because people will get very comfortable. And this is just the prediction I'm making right now. I think there's going to be a lot of talk. So right now interest rates are supposed to be, they're not pricing in the amount of cuts that the new admin is trying to put in through the new Fed chairman. So we'll see a lot of the market just starting to go up a little bit, and probably during later half of February, early March, we'll see crypto and everything starting to go as well. And then the narrative will start to kick in that this year is going to be the greatest year ever with all the new Fed chairman, and then most likely the bond market will throw a tantrum and the prices will come down, and then the actual policy will start to kind of take shape, and we'll probably see a slow grind up towards the end of the year. I do still expect the year to end up positively, but I don't think that we'll have a straight an easy year like we had in 23 or 24. It's probably going to be more like 25, with net upside being less than what we had in 2025. That's just my prediction for now. We have only seen twice in the history of the stock market where the indices like the QQQ have have given a positive return 4 years on the trot. So that's a pretty strong sign for me, at least, that this year is going to be tough. It's not going to be pretty super straightforward. So that's my lens right now that I'm looking at the market from, and as I've said, I'll be very nimble this year. I'm going to try to get out on time and hopefully get back in whenever the thing turns. Easier said than done, obviously, but we'll try to do the best we can possibly do, right? Okay, awesome. So let's just look at some charts here. We're going to talk about the indices and why I think we still have room to go. So I generally use this indicator. It's called the money flow. So the money flow indicator, as you can see here, these are the EMAs that I use. They're very tight right now. So tight EMAs means the trend is very strong, and this is the weekly chart. So you can see that the trends have held on for quite a long time actually at this point. So yeah, so I think we will continue to see this, and you'll probably see another. I anticipate you'll probably see like a parabolic move up, and then maybe a move down at some point. But the chart looks really nice. Every time you see a loss of these important bands, like a weekly close below these bands, see a huge drawdown. That's generally what happens. Like this one was an exception, I guess, but it got recovered the very next week. So, but over here, as you see, you lost this band out in the 2020 bull market, right? We lost this band and we had this structural decline. The structural decline could possibly happen whenever the AI bubble starts to kind of go away, but that's probably not going to happen this year, I don't think, because the trends are still very strong in terms of the build out and everything else. So the QQQ chart looks very strong. On the daily, we have a very nice bullish signal here. So this is the money flow on the daily. As you can see, every time the money flow goes into red and then goes back into the green, we get a very nice rally here right afterwards. So this is something that's just happening, and I think that's probably going to play out well here. So like as you can see, we got this nice little 10% move here. Then we had like around 450 to the top to bottom was about another 10% here, right? And then right about here as well, like we had the red and then we had the green money flow coming up from 370. We went all the way up to 453. So that's another 20% move. So I'm not expecting this to be a 20% move. I expect this to be a violent 10% move. So I think that's what we can expect. It's probably going to be a very a very bullish Q1, and then Q2, mid Q2 is probably where we start to top out, and we might get some aggressive downside, and people might have a reckoning, and then we come back again. As I said, we'll probably end the year in positive terms. Same thing for SPX chart. Looks very good, very strong trend, still keeps going. Once it starts to go too far away from these EMA bands, you know that this is a parabolic move and probably not a great time to buy. But yeah, like for high beta thematic plays, this is a very nice looking chart, which I think will continue to go higher. The IWM chart looks amazing. So this is what, like, let's just talk about some technical trading as well. So you can see this was the double top. We had this huge drawdown. Now we have reclaimed this. We lost this balance, and then we lost this level and we reclaimed it. So this is a very bullish signal. Almost every time when you see a balance, I'm saying it's calling it a balance, because this is the balance between the buyers and sellers, right? So we had this close above this support, or now support, I guess, earlier resistance. We lost this level right into this EMA bands. Beautiful little wick here. This was a pretty nice bottom indicator, right? Because you can see these long wicks on either side are very strong indication on the weekly charts. So you can see a long wick here at the bottom, right in this EMA bands, and this daily 100 EMA being defended by the market. And then we've only had like a up move since then. So I do expect this move to continue. We might get some chop on the side and then continue to go higher. This chart looks very good. Money flow still looking very positive. Daily money flow also, from red to green. So generally, when that happens, as we've talked about, this leads to big moves. So IWM is a little less, reliable, because we've seen what happens with IWM. It's very, it's very volatile, and small caps have just not done well. But now, given the environment and given the new Fed chairman coming in, I think we'll probably see a nice little move. So next thing, I'm going to talk about some BTC QQQ. So this chart is all the BTC charts, BTC dominance, BTC chart itself. Any chart that I'm looking at right now, this is just my opinion, I just don't see a direction for BTC at the moment. This is a pretty good long-term accumulation level. So as you can see, last time when we had this long accumulation right here, right, this happened during when BTC lost the 200 weekly EMA, and it's basically sitting at so this ratio BTC QQQ is sitting at the 200 weekly EMA right now. we can see a little bit of a drawdown. Like that'll be the worst case scenario if it does come down to 300 MA, and that'll be a pretty nice level to add as well. But doesn't look like money flow is just starting to go into the red. Generally when that happens, there's either chop or there's a drop. Last every time that this has happened, we've seen some chop. So you'll see here there's a chop here, there's a chop here. So this doesn't happen too often, because like if QQQ goes up, historically we all know that BTC is like a high beta version of QQQ. So QQQ performing this way is not it's not too common that BTC does what it's doing right now. I think a lot of the hacks and a lot of the liquidity events that have happened over the last 6 months have really kicked the liquidity out of this market. People don't want to trade this anymore, right? Because like it's very manipulated and the flows are not that easy and everything else. So I think that's probably what's playing a huge impact on this chart at the moment. So I don't see this changing at least for a month. As I said, like I think February end is when you'll see the crypto market start to breathe a little bit more, but right now it just feels like we might just consolidate for a little bit more before we go higher. I think we need a catalyst for this to turn. Right now, don't really see it policy wise or anything. I might be wrong, but and I did pick up some BTC at about 90K because I think like this is a pretty good level to add for in the short term, in the midterm. But I'm not sure in the short term, like in the next month or two, we'll see like a huge rally back. In the next 2 months, possibly the next month, I think we'll just probably go sideways. I know I'm contradicting myself, sorry, just making this video after a long time, so it'll probably take me some time to get back into it. So let's talk about a few stocks that I've looked at this week and what my thought process is around those thoughts and around those stocks, and if whether or not I like them or not. So the first stock that I looked at this week was XPOF. This is Exponential Fitness. So this company has had a pretty bad history. The chart looks primed for a move higher. As you can see, this is the first nice reclaim of the short-term EMAs. I could see this going up right into the $11 region. So basically the thesis here is Pilates is going quite viral right now. So this was my tweet that I had shared. I'll leave the link to my X in the description. You can go follow me. I do try to share as many ideas as I possibly can during the week. So XPOF, basically I got interested in this name because of Pilates socks and Pilates mat trends were going parabolic. So 55% of their EBITDA roughly comes from they have multiple franchises. One of the franchises that they have, one of the group of franchises that they have is called I think what is it called? Sorry, I'm blanking out on that. Yeah, sorry, my bad. I should have thought about this a little bit more. So Reformer Pilates is the type of Pilates that they have, right? And yeah, the trends for their specific brand was not looking good. Yeah, that's called Club Pilates. Yes. So the Club Pilates trends were not looking that great. So this was my tweet on this company. I was just saying the Pilates socks, Pilates mat, and Reformer Pilates are going parabolic. This could be a great trade potentially, but XPOF has so much baggage, which makes me hesitant on the name. The bull case here was, Pilates trends being strong, Reformer Pilates being strong. GLP-1 patients are switching to Pilates because they almost have to, due to the impact that it has on their bones. So it helps with fat loss and also keeps with helps build muscle. And TikTok also, the trends were looking very good, but there's been a lot of problems with this company. They have had some fraud allegations. They've had their franchisees for one of their segments have done a class action lawsuit against them. They have too much debt. They have $500 million in debt right now that they don't have enough operating cash flow to cover for. But if the trends for Club Pilates were looking strong, I would have potentially considered this trade, but right now that is not the case. So that is a huge blind spot. The website traffic for Club Pilates is not looking that great either. Then I was also looking at some of the reviews on Reddit as well as TikTok, and it does feel like the number one complaint for people is like variable instructor quality. So sometimes there's no uniformity as to the kind of instructor that you'll get. So some locations will have really good instructors, some locations will have really bad instructors. So that leads to you can't really rely on the quality of their product. So that's a problem. And Club Pilates also makes money through equipment sales. So basically they sell the equipment to their franchisees, and that portion of the business booms when you have revenue coming through the equipment sales, because when there's new clubs opening, you'll sell a lot of equipment, but there's a certain point after which the number of clubs that you can get into, they just completely stop, or the percentage increase starts to go down massively, right? If you're opening when you have 0 clubs, you can open 300, 400 clubs every year. But like after you've got to 1200, 1300 clubs, it's very hard the market becomes saturated. So you can't open 400 clubs going forward, right? So that's why equipment sales were down 49%. Those are a high margin business. So the comps look a little hard. And also they were talking about the payback period for some of these franchisees being very short. So you can get your money back within like 12 to 14 months, basically, like the franchisees can. So the initial number of people who come to these Club Pilates is very high, so it kind of makes it hard for the comps to be comps to be good year on year, because if you've already reached full capacity in the first year, second year is obviously going to be tough for you to get to like the 10% incremental capacity, because you're already full, right? So what are you going to do? So headline numbers for comps look very bad. It's generally flat. Like, yes, underbelly you can say that strong business, but that comms is a very important number. Same store sales is a very important number, and if that's not strong, then investors try to shy away from the company. So this company could do well. I think like if Club Pilates does inflect, this company is a multi-bagger potentially, and if they do get the class action lawsuit figured out, that's another catalyst. And then they also kind of took care of the share structure that they had, where they had preferred shares and a bunch of like different shareholders were not happy with the structure. So they've consolidated that into one tranche as well. But I think there's still a lot of baggage with this company, and people are not going to be willing to hold the stock in the short term at least. And then once the catalysts kind of play out, this could be a stock where it kind of gets re-rated very quickly. But I'm not quite sure right now if I'm going to trade this, and I want to be careful with my money. If there's no catalyst here, there's no point, right? So yeah, so that's the first stock that I looked at. The second stock that I looked at this week was Movado. So this is a very interesting company. It's already up like 5% or something since I shared this trade, and this is what I said. I was saying I'm currently tracking this, and I think patient investors can make money on this stock. So Movado is basically an analog watch company. They have their own brands, like the Movado brand, and then there's MVMT, and then there's a couple of the brands. The trends for those don't look that strong. My primary reason for getting interested in this company was that they are the company that licenses Coach watches. So they are the one who are responsible for selling these. So, or I should say, manufacturing these. So, and Coach trends, as we all know, have been very strong. As you can see here, Coach watches are just going parabolic. So that was the reason why I like this trade. But the problem lies here with the capital allocation. So basically, I listened to the earnings call. The Greenberg family, who owns more than 50% of the voting rights, they are not willing to return capital to shareholders. 40% of the valuation right now for this company is locked into is locked with cash, and they have no debt whatsoever. So they can do an aggressive shareholder buyback, which will automatically add value to the shareholders, but they don't want to do this. Instead, I mean, they own a lot of the stock, so they're just enjoying the 6% dividend, which again is pretty good for people who would be interested in this company. And I think the licensed brand watches is going to do really well. As you can see here, all the trends for Coach women's watches, Tommy Hilfiger watches, Boss plus Hugo Boss watches, Calvin Klein CK watches, and Lacoste watches, all of them look very strong, but Movado trends have been a little lackluster. So I'm not a big fan of this trade in terms of the convexity that this trade offers, but I do know that given the valuation, there's going to be dividend investors going to be interested in this. There are going to be value investors who are going to be very interested in this, and the numbers most likely, I think we'll see a little bit of a spike this time around. So there'll probably be a nice little bump, and I think the stock will continue to go higher, but it doesn't really meet my threshold of what I want in a stock. So yeah, so I think we will probably see it to go up another 10%, easily up to $25, and maybe beyond, I don't know. But the Movado brand has to inflect for this to have any sort of like material upside. Right now, it just doesn't feel like there is anything that makes me interested in this company. But that could change, right? I'm someone who would try to stay nimble and see if there's an opportunity that comes up in this company at some point. We will probably think about it, but at this moment, I don't really see anything that's super interesting. So that was Movado, which I am looking at, but not super interested in, just because it doesn't allow the complex, the convexity. The other one that this is going to be a very short one is Escalade Corp. So Escalade Corp basically makes sports equipment. I was kind of interested in this due to the Marty McFly movie, and I was kind of seeing if table tennis and ping pong trends have increased. So they own these two brands, Ping Pong as well as Stiga. We see like the trends are inflecting a little bit, but then I was kind of listening to the earnings call, and I've figured out that the pickleball trend, which is so strong, and everybody's heard about it and it's still growing, they have not been able to gain market share in that category as well, and that trend alone should have reared the stock higher because it's such a huge trend, but it hasn't done so. So although this company sits right at the middle of like a lot of different trends going on right now, like Pilates is another one, right? They're a beneficiary from the Pilates trend as well, but I just don't see the upside in the short term. I don't really see a catalyst like pickleball hasn't really helped the stock so much, so I don't think that there's anything else that could really do that. The only way I would have gotten interested in this company was if we had some visibility into how much table tennis means for them, and if we had like a significant traction in the table tennis market. I don't see that just yet. Maybe that changes in a little while, and again we might be interested in it at that point, but right now it just doesn't make sense to be long Escalade at the moment. So the other two stocks that I probably will do a deep dive on, which I think have really good upside. I think I got lucky with the timing and what I had tweeted about this company. So the ticker is TBTG. It's TechBeauty Group. It is a company based out of England. It's a new IPO. So a lot of people don't really know about this company as much as I was able to find out due to just like doing some research and everything else. So let's just talk about this company here. So TBTG is a very interesting company as well. Now what I did was I had tweeted about it a little while back here. Let's see. So my tweet here was, I found a rare company in the red blue light therapy sector. The fundamentals are disconnected from the price, trading at 6 times near-term EBITDA, minimum 30% growth for FY25, expecting 20% growth for FY26, and zero debt. 4 insiders buying at current market price. The current market price the day I tweeted about this company was about 280 pence, and now it's gone up 10% this week since we tweeted about it. I think this company is going to re-rate significantly higher. The reason being, I'll just open up some trends. So this is the article that I was working on. Will be posted on my Substack. I will share the link once it's done. I'm still working on it. So basically red light therapy trends have been going parabolic this year. Red light therapy masks, I think if you just follow social media at all, or if the beauty trends, you probably have seen some of the masks that are going crazy. Current body is one of the best, if not the best, in this segment. So as you can see, like search trends here. So this is what I had looked at, and that's what I had tweeted the other day. And I had said that they probably will release an update this week at some point. Here, as I said, expecting a pre-announcement this month to wake this one up. So that's what we had expected, because it was just so it's a new IPO, so people don't really know about it as much, and we were expecting that. And then yes, there we go. Lo and behold, we got an update this week where they talked about the growth being actually 36% this year, and also the launch of Series 2 TRIA 4X hair removal. So this is why I think this company is completely misunderstood. So you can see here, they said $35.5 million in EBITDA this quarter, and their gross margins now are 60%. So if they're able to even have 20% growth in revenue next year, which I think is quite understated, because I think the red light therapy mask trend is just starting out. So if you're sitting at 136 million pounds, and if you add 20% to that, you get to about $165 million in revenue for the next year. So if you're getting $165 million in revenue next year, you probably are going to get to about 55 to 60 million in EBITDA next year, possibly as well. Now, red light therapy mask is 90% of their revenue at the moment, and this is probably only going to grow, because what's going to happen here is you'll have 90% growth from current body, and they've explicitly said that 2 other brands, Zip Beauty and the new product that they're going to launch right now, at home laser removal device. It's called TRIA 2. The first one failed, but they didn't own it. It was owned by someone else. So they're coming back with their marketing power and what they know with current body and like red light therapy masks, and they're going to introduce this year. So this is a completely new vertical that doesn't have any comps whatsoever in the past. So what's going to happen this year, I feel, at least from my perspective, is that they'll have the TRIA will probably do well as it starts out, and then it'll probably contribute around $15 to $20 million in revenue alone. So we're basically saying Zip doesn't grow and TRIA just does what normally it would do. Then you get to a 20% growth like right away here by not even adding like robust growth from current body or something. There's a scenario where the revenue for current body next year is about 180 to 190 million dollars, right? And with that, you're probably looking at EBITDA of around 65 to 70 million dollars. So, and the company is going to be profitable. They are already profitable. They're going to have no debt either after they've paid out the debt with the IPO proceeds, because that was the reason for the IPO, I guess. And yeah, this company is very patient. They're very patient in terms of their marketing spend and everything else. So I do think this company is going to re-rate materially higher. I do believe that we'll probably go up at least 50% from your minimum, I feel like, this year. And I think the revenue is going to continue to be stronger, and hopefully they'll continue to give us some updates in terms of just releasing just pre-announcements and just raising the guide during the year, and that'll probably keep on re-rating the stock higher. And that's how I think this year is going to go for them. So this is a setup that I really like, and I do think that they're going to continue to do well this year. So the next company, again, this one is an article that I'm working on right now. I'm almost done with this one. This is another very interesting company. It's a networking company called Ubiquiti. So this company, the primary shareholder, this is the CEO, Robert Pera. He owns 93% of the company. So the biggest risk, straightforward, is the key man risk. So if something was to, God forbid, happen to Robert Pera, or if he was to divest his holdings, the stock could go down quite a bit. But this company, I feel like, even if the earnings are not great this quarter, although I think they would be, because the all data just looks phenomenal, website traffic and everything else, it's just going parabolic. So you'll see here the search trends for Ubiquiti and Unify looking so strong, right? These are the Amazon trends. So they don't even sell on Amazon directly, but the fact that people are willing to overpay on Amazon, because people just charge a very high gross margin on, or very high margin on the products on Amazon, so they have to they sell at a much higher price than they would actually buy it from web store. The reason why people would buy from Amazon is because the company has had issues with stocking, and that's what my primary concern for this trade for this quarter is, that they might not have enough stock. But as I said, in some of my tweets here, I feel like this is my highest conviction trade since D-Box. I feel like the upside is a lot. With D-Box, we allocated a big portion of our portfolio to it. The reason why we did that was because of the fact that we know that as Warren Buffett would say, a dummy could run that business. With Ubiquiti, it depends on the founder and the CEO here, Robert Pera, and his execution. And if something was to happen to him, there would be a problem. So that's my only issue with this trade. This is the web traffic, as you can see, it's just went parabolic in November, December for the EU website as well as for the US website. So we're seeing this massive surge in web traffic, and just the Reddit data and everything else looks very bullish as well. So I'm very convicted about this trade. I think it's going to do well during this year. I have some confidence because I have some credit card data that I looked at as well, and it looks like it's very strong for November, December. I cannot say for sure that this quarter will be great, because this company doesn't do any earnings calls, so it's very hard to compare what was said last quarter, what was said the previous quarter sequentially, growth or discounting or something like that. So it's very hard to say, so you're basically flying blind. But with this company, I'd be very happy to hold it. There's a lot of long-term tailwinds, which I will talk about in a separate video, because I think this deserves a 30-40 minute video alone, because there's so much going on with this company that is very interesting. And I feel like Wall Street has a huge blind spot for this company, because the company doesn't have any governance. They don't have any IR events. They don't have there's just one analyst covering this company. They don't have direct access to the company and everything else. So there's a lot of stuff missing. This is a pure social play, and I do feel like I'm gonna make decent money on this stock this year. So looking forward to that. Awesome. I will do a video on this because I do want to talk about this stock in detail. We will be talking about it at some point. The other stock that I really like here, I'm not sure if this company will ever wake up, but the company's name is Hobonichi Inc. This is a Japanese company, ticker symbol 3560.T. I guess 3560 on TSE. And I buy my stocks through IBKR. If you are interested, I can give you a link or something, and we'll both get $100. I think that's how it generally works, but I'm not 100% sure about that either, to be honest. But yeah, this is what. So basically, my thesis is outlined here, which I had shared back in September. The stock is up 10%, so not great. But the numbers were really good. We had I was basically tweeting about this significantly over the last 3-4 months. I've been saying that this company is materially undervalued. I think the liquidity is a big issue with this. It's a very small market cap, and there's not enough it's the liquidity in these US stock or in this Japanese stocks are not that great as compared to the US. If this company was listed in the US, it would be trading materially higher, but there's nothing you can do about it. So this was my trade. Basically said that most of their products are out of stock. And some of the ones that are in stock are also kind of running low. So this was the trade here. The numbers were quite amazing. And they also have an app that they're kind of launching as well, which will help with them with margins going forward as well. So as you can see, revenue was up like almost 19%. Operating profit was up 29%. Operating profit was up 29%. Quarterly net income was up 25% as well. So this stock is materially undervalued. They basically sell planners, and those planners are they have tie-ups with bigger IPs like One Piece, as you can see. So this is, and they have like beautiful covers. They have different types of just pages and everything else, and the pages themselves are made from a specific place, which comes from Tomi River in Japan. So those papers are very very specific that these companies use, and they're very resilient to fountain pens and everything. So it's just the quality of the paper and just the quality of the experience that people get from writing on these pages, which kind of makes it very interesting. And the social trends are still very strong for this company, where things are selling out very quickly for their products. So as you can see, the peaks are twice as high as what they were last year. And the reason why it didn't translate entirely to revenue was because of supply. So they didn't have enough supply and they sold out of the product, which is again not a bad problem to have. The reason being that if you for like a planner company, for any book, which the planner is for 2026, right? So if you have too much supply of product and it doesn't sell out, it's going to be obsolete inventory. So they can't really take that risk. So that's why their inventory is like, tightly managed, which I'm not too against, right? So yeah, so it's trends here as well, going parabolic. And the quarter was up till November, so they probably had a very strong December as well. So Q2 should be good as well. I'm still invested in the company. I've been thinking about divesting because it just hasn't traded the way I would have ideally liked it to trade, but it is what it is. I'm just gonna stick it out and hopefully hope that this week is a little better for these companies, as it gets more love from investors. So hopefully this will move higher. We'll see what happens. Yeah, and the two stocks that I'm looking at for a trade, and they'll be be trading. The first of them is Open. So I was eyeing this setup for a long time. I'll give you a perfect setup that works like 95% of the time. So basically what you would have to do is, if you know anything about technical trading, there's something called a support resistance flip. So what that basically means is, as you can see, as Open is going down, this specific level this is the weekly chart, so it's a very important level here. As you can see, came up twice and got rejected twice, right? Came down. Now as you look here, right, this level was revisited. You'll see this red weekly candle show up. The stock was down almost 11% right at this level, right? Again, triple top potentially, but no, it just blasted through. Went higher, came down. Now this area is the support area, as we talked about, right? This was such a strong resistance area that the stock tried to come here a couple times, missed it, and we didn't reach this point in like a long time, right? Like this level was not reached in over 3.5 years. So then we had this long wick right into the zone where we saw buyers come in, right? So this was resistance, which now became support because the stock found support here. If this level was a short-term level, maybe this wouldn't have been respected this way. But a lot of the traders are looking for this specific level, where it's called support resistance flip, where the stock had failed multiple times here. The harder it rejects, the better it is when it comes back into this level. So we found this support right exactly at these lines, and we see all these EMAs, the VWAPs kind of coming together in this level alone. So this was a high confidence level. I added a little bit, not at this very low, obviously, like somewhere around this mark, and then I added more over here as well, and you can see the money flow also started to reduce. So when it goes from negative to positive, we'll see like a huge surge. So I do believe that Open is setting up for a big move. If I had to choose a stock, I think there's going to be still volatility. So like, as you can see, this is a weekly level, right? So this thing could drop from $7.20 still down to $5.36. Like, it's hard to see that this stock will drop 30%. But I think like if someone was kind of, taking the trade right now, that's what I would recommend. It's not financial advice, but have that open mind if you want to. Open mind, I guess, pun intended. But if you want to trade the stock, be thinking about, okay, this could be a 30% drawdown. So maybe options is the best play. I have options. I have $10 options that I've bought, and also bought some leaps as well, because I think we are definitely going up to the $14 because there's no real resistance up till this level, and this is a perfect setup. We have EMA support and support resistance flip at the same level. That generally means you'll probably see, like, it's almost like an 100% trade. Nothing is 100% right, but still, this is one of the best trades you can actually take, and I think this is going to read it higher. And then we had the catalyst of Mr. Trump saying that there'll be a cap on not cap, but like a prohibition on corporations being able to buy houses. So that's another thing that's a big catalyst for them. Now they have a new news catalyst as well, and interestingly enough, the news catalyst came right on the support level. So I think we'll probably see this re-rate higher, and a lot of the trades which are high momentum stocks are setting up not exactly like this, but a lot of trades are like this. So that's what makes me very bullish for the next month or two, and I think we're going to have like a nice little rally, and that kind of, that's the lens I'm looking at the market at from. And my momentum stocks, I'm going to be careful by not taking profit too quickly is what I'm getting at right now. The other one, I know we love crypto, right? So XMR is another one that I traded. I got into it right around this level here, so we're up nicely. I'm not taking profits. The reason why I got into this was when we heard about Zcash having the dev team leave, and the Zcash narrative has been so strong, right? So this was where my mind went, and like it's playing out relatively well. The position is not that big for me because it's crypto, but this is one that I would be willing to, or I'd be looking to trade. So one thing that I've learned over the last few months is the people that trade, like, there's a lot of liquidity that goes into the stocks or crypto or something, or instruments that are parabolically going higher. So if you want to buy the dips, you want to buy dips on things that have active buyers looking to buy the dips. So this is happen with silver. It happened with Zcash. It happens almost all across until a catalyst comes where you'll see that the underlying security is not performing as well anymore. So I have not seen too many people talk about XMR just yet. So I think we're still quite early. So I don't have a futures position on this. I just bought a little bit of a cash position. I'm just going to be willing to ride this. Money flow is still going up, so I think we have some legs into this left in this trade. If I missed out on this initial surge and I was looking to buy, I would probably be looking at 450 is a very high probability level, which I think where the price will find a local bottom. And if you're being a little aggressive, I'll probably look at on 500, maybe sweep of the $500 level. If it doesn't come around and it just gets close and you see a nice little like wick on the shorter candles, then I would just buy there too, because that probably means that there's a huge demand. So what I mean is, like, basically if you get a retest, right, and you have an alert in, or you have a limit order in at 503 and it never hits 503, it goes to 503 or so 515 or something, and you start seeing long candles, there's a high chance that this goes like this. It's very possible, because the buyers are going to be willing to buy at any level, and this is relatively early in its journey, so probably the drawdowns won't be that massive, and we'll probably get that first parabolic move like we had in silver and some other instruments that we've seen. So that's the end of this video, guys. I'll continue to try to share more ideas and stocks and everything else, and hopefully you like this format. If you don't, just please let me know, and I will not do this. But if you do like these long form videos, please let me know, so then I kind of know, okay, there's an interest in these type of videos, and I'll keep on doing these going forward. So thanks so much for sticking with me, guys. Thanks for all the subscribers. If you can like and subscribe, that's all I ask. That's all I'll ever ask. It just will help me, maybe hire someone to do some editing and things like that, and grow this channel further, and hopefully get more people educated in the stock market, because I think this is something that everybody should be looking into, especially if they care about their future. This is probably the greatest wealth engine that one could ever come across, without the risks of any regulation and stuff like that, because there's so many companies out there, so many really strong companies out there who have really smart individuals who are working night and day to enrich us, obviously, and enrich themselves as well. It's the greatest win-win there has been in humankind, in my opinion. So thanks for enjoying this video, guys. Thanks for sticking until 39th minute. I really enjoy making these videos, and we'll see you in the next one. Take care. Bye.